Good day, everyone. My name is Toto, and today I'll be doing incomplete records. So most students ask me to touch on the examples that was provided in their textbook, their N5 Financial Accounting N5 textbooks. So this is some of the information I tried to extract some of the information so that if ever you don't have a textbook, then you'll be able to see. So this is all the information that we'll be needing to do our incomplete records. So this activity is in your textbook, in your N5 textbook. So if ever you don't have the textbook, this is all the information that was provided on the textbook. So today we'll be doing incomplete records. So we have our information, and then we have our answer sheet. Yeah, so after this activity, I will also try to do like a past question paper concerning incomplete records. So we'll be doing balance sheet. We'll be doing mostly balance sheet because that's what they will be asking you on your exam. So yeah, we'll be touching on balance sheet. So question 5 also, it's on a past question paper, so I'm not done typing in all the information, but then I will finish the information and then I will post another video later on. So for now, I'm gonna start with this example first, and then after that, that's when I'll do the question paper, the past question paper. So please be sure to subscribe because we are going to post more videos concerning your accounting and all those other subjects that you guys find difficult to understand. So please do like and subscribe if ever this video helps you. And then yeah, without wasting any time, let's get into the activity. So in this activity, we are given the following information. They're saying calculate at the beginning here. I'm reading here. So they're saying calculate the net profit for the year ending 31st December 2014 on the basis of the following data provided. So we are given all this information. So this is the information at the beginning. They say these assets at the beginning, whoever the person is. So they say these assets and liabilities at the beginning of the period were as follow. So you have your equipment, your vehicle, your inventory, cash in bank, debtors and creditors, also the loan. So all this information that is being provided here, this is all the information from at the beginning. So now we are given additional information, which is from B all the way going down. This is all the additional information that we'll be using to make all the necessary changes and complete our balance sheet. So this is the balance sheet. So A, we are given what? Our information at the beginning. So it's more like our balance sheet. So this balance sheet, we have to do all the necessary changes in order to have our balance sheet at the end with all the information that has been left out included. Okay, so moving on. So when we start our balance sheet, we come to this is our structure. So statement of financial position, which is our balance sheet. And then, so this is our structure. You have your assets, your non-current assets, fixed assets, financial assets, kanjalo until the end, which is your total equity and liability. So this is your balance sheet structure. And then on the side here, you have your current account. You have your current account. Your note for current account. How to do your capital, meaning this note number 6. So we'll be using this. We'll be using that to do that note number 6. We'll be using all this to do that note number 6. And then we have note number 1. So this is our note number 1. So note number 1 we'll be using this structure here to finish off this PPE, which is property, plant, and equipment. Or you can just call it fixed assets. So this is note number 1. Okay, so we're starting with our balance sheet. So at the beginning, we'll start with our fixed. We'll start with our fixed asset. And then okay, so our balance sheet. So we have note number one. So we're going to do this note number one, and then at the end, the amount that we're going to get, our carrying value at the end, meaning this amount that's going to appear here, that's the amount we'll be using to, that's the amount that we're going to take to our PPE, which is this part here. So how do we do that? How do we do that? We are giving all the information, isn't it? So let's look at our information. Going back to our example. So A, they say his assets and liability at the beginning. So we have equipment at cost, and then we also have vehicle at cost. So equipment at cost, it's 14,200. So we're going to write that down. Our equipment at cost, 14,200. And then our vehicle, which is 25,600. Also, we're going to write that down, which is 25,600. Okay. So this is all the information we're given concerning note number one on A, which is this is A. So that's all the information we're given. So we're going to look also on our additional information as to which information here affects our note number one. So they say B, they say his bank statement show the credit balance of 14. So this one does not include. So okay, I'm going to quickly look at the one that affects our note number one. So we have F, letter F. Letter F, they say from the cancelled check, it was clear that he had purchased equipment of 1,500 during the year. So this person bought equipment during the year. So we're going to include that amount on our additional information. So it's what, 1,500. Done. And then continue checking what they're telling us. Okay, we also have G, which they tell us that our G, they're telling us that depreciation of 500 and 1,200 respectively on equipment and vehicle had been written off. So this is what our depreciation, 500 and 1,200 respectively. So equipment is 500 and then vehicle is 1,200. So equipment, our depreciation, which is 500, and then for vehicle, which is 1,200. Like that. So it has to be in brackets to show that this is a negative amount. Because talking about our depreciation, always minus our depreciation. Okay, so this thing doesn't allow me to just bracket everything. Okay, so but then you get the idea that you have to bracket. You have to bracket the amount to show that it's a negative balance. Let me just try to do this. Okay, so but then either way, moving on. So we keep checking everything that we continue checking for everything that involves our note number one. So I think that's all the information that affects our note number one. So we're going to use all this information to get our carrying value at the end. So we are not giving accumulated depreciation at the beginning. So we just going to say it's 0. Then also here it's 0. And then we get the total. We get our total, which is equals to sum. Then just add the 2. And enter. So this is our total cost at the beginning. So we all know that in order to get our carrying value at the beginning, we have to say what? This 14,200, our cost minus accumulated depreciation to get what? Carrying value at the beginning. So we say, so since this is 0, 0, our carrying value at the beginning will still stay there, the same. So 14,200. Also, it's 25,600. Then you also get the total. So the total will be the same. So we just add this there. And then, yeah, we have something like this. And then now we have to come to our value at the end. So here, we never bought for vehicle, we don't have any additions for vehicle, so it's going to be 0. And then now we come into our balances at the end. So how do we do that? So we firstly going to get our cost at the end. So in order to get your cost, you say carrying value at the beginning. You say your cost at the beginning, plus your additions to get what? The cost at the end. So meaning this amount plus this amount to get this amount. So what we're going to do is we're going to say is equals to sum. So sum, we're adding the two numbers. So we're adding this amount and this amount. Then we see enter, and then it gives us our 15,700. So this 15,700 is what our cost at the end. And then we come into vehicle. Vehicle, we have no additions. So meaning the cost at the beginning, this amount, will take it as it is. And then we just type it there also, 25,600. And then we come into our accumulated depreciation. So accumulated depreciation, how do we get our accumulated depreciation? We say accumulated depreciation at the beginning plus our depreciation to get what? Our accumulated depreciation at the end. So in short, what I'm saying is we're going to say this 0 plus this 500 to get what? Our accumulated depreciation at the end. So since accumulated depreciation at the beginning, we don't have anything, so we're just going to keep this with the two amounts as they are, and then we just type it there. 500, and also here 1,200. 1,200. And then we are done. Now what do we need to do? We need our carrying value at the end. So this amount are supposed to be in brackets. Supposed to be in brackets. Supposed to be in brackets. And then in order to get what our carrying value, we have to say this minus this to get this. So we say this equals to, let me see if I do this. Okay, so it doesn't give us, so we say it's equals to this. And then same thing here, we're saying is equals to 25,600 minus the 1,200. And then we get our answer of 26. So this answer is incorrect. So the answers are incorrect. So let me just remove this. Remove the sign. So our answer is supposed to give us what? This, when you say 15,700 minus the 500, you're supposed to get what? Our 15,200. So same thing here. When you say 25,600 minus the 1,200, we get our 24,400. And then we get our two charts. So we can just drag this one down, get all the two charts. So this is all our two charts. So we said this plus this to get this amount. So this amount, that's the amount we need. That's the amount we're going to use, the 39,600. That's the amount we're going to use for our PPE, which is this here. So I'm going to take that amount directly and then just put it right there. Then we'll say 39,600. And then we are done with our node number 1. So that's how you do your node number 1. Okay, so moving on. We're going to our fixed deposit. We're going to our financial asset. So financial asset, they're talking about our fixed deposit. So fixed deposit. Okay, so in this case, they're not talking anything about a fixed deposit. So there's nothing concerning a fixed deposit. So meaning we didn't invest any money, or this person didn't invest any money. So we're just going to say 0. And then from there we say this. We say our PPE plus our financial assets in order to get what? Our total non-current assets. So in this case, we see the 9,600 plus the 0, which will give us 39,600. Doesn't change. And then we move on to our current assets. So current assets, firstly, we have what? Our inventory. So we're going to look at all the information concerning our inventory and see what's needed to be done. So this in our inventory. At the beginning, our balances at the beginning, we have this inventory, which is 58,100. So that 58,100, 58,100, and then we check also our additional information as to see what do they tell us concerning our inventory. So we're going to check down here what they're telling us. So inventory. So D, letter D, they're saying an inventory check at cost show that his inventory amounted to 75,200. So meaning at the end we had this 75,200 after they took into consideration, after they took everything into consideration, we ended up with the 75,200. So meaning this one is the amount at the beginning, the amount that we're giving, it's the one in the beginning. So we're looking for what? For the amount at the end. So meaning we're going to use the one that's been given in our additional information, which is 75,200. So 75,200. We're going to keep that amount and then we type it in our balance sheet, 75,200. Okay, and then we move on, and then we have what? Our trade and other receivables. Trade and other receivables. So we're going to check again what the team has concerning our trade and other receivables. So our trade and other receivables, we know that they're talking about our debtors. So information at the beginning, the team as our debtors was 12,300. And then we check other information. So I'm going to highlight all the information that I've already dealt with trade. Oh yeah, trade. So we did for just D, we did D, so we just want to highlight it so that it doesn't confuse us. Okay, I'm done with that. And then what else did I finish? Our depreciation, and then also FNG, finished with that. So just gonna, so that it doesn't confuse us. Okay, so I think that's everything. Okay, so they're telling us that the outstanding debtors and creditors respectively amounted to 15,200 and 5,600. So we're talking about our debtors and creditors at the end. So all this information that's been given to us here from B until J, that's our information at the end. So we're using that information is the one we need to use to complete our balance sheet. So we have our debtors and creditors on top there by A, which is the 12,300, and then the 2,500 for creditors. So this is the amount at the beginning. So now we are giving the amount at the end. So we're going to use these amounts at the end. So let's just record both this amount and be done with it. So it's what? 15,200 for debtors. 15,200 for debtors. And then also for the retainers for creditors, it's 5,600. So let's just record that also into our creditors, which is our trade and other payables. So it's what? Let me just confirm the amount. It's 5,600. So just type in that 5,600 at the same time. 5,600, just like that. Okay, so now we're moving on. So we're done with E. So we just highlight E, done. Then we keep on going, still on our assets. We're still on our assets. So now next is our cash and cash equivalent. So we all know our cash and cash equivalent consists of, we have bank, we have, let me just try to type down the amounts. Not the amounts, what's included in our cash and cash equivalent. Let me just try to type everything there. So in our cash and cash equivalent, we have our bank. And then we also have our petty cash. And then we also have our cash flow. And then what else? I think that's everything. Yeah, I think that's all. Okay, so we're going to check everything concerning our cash and cash equivalent on our the information we are given. So we already have here on our A, letter A, the same on his assets and liabilities at the beginning. Our assets and liabilities at the beginning, we have cash in bank. Cash in bank between us is what? 10,300, which is our cash in bank. And then also B, they're telling us that his bank statement showed a credit balance. So we all know that a credit balance is what? A positive amount. But a check of 2,400 has not yet been brought into account by the bank. So in this 10,300, a check of 2,400 has not been brought into account by the bank. So we need to add this 2,400 to this 10,000. So we're going to say what is equals to this amount plus 2,400. And then we get what? Our 12,700. So this 12,700, it's for what? For bank. So we come here, and then for bank, we see what? 12,700. And then we are done with B. Let's just highlight that quickly. Okay, we're done with B. So we have C also. C, they're telling us that cash received has been deposited, except for 100 Rand that was being kept as PT cash. So the 100 Rand has been kept for PT cash. So that amount is for PT cash. So we go back to our balance sheet, and then PT cash we have what? Our 100 Rand. Our 100. Then we are done with C. So C, we're done. Let's just highlight that quickly. And then we move on. Okay, so C, we are done with C, we are done with B, and then we're checking also where they're telling us about our cash flow. So we don't have anything concerning cash flow. So I'm assuming that that's everything, that's all our information concerning our cash and cash equivalent. So in order to get our total cash and cash equivalent, we have to add the two amounts to get this amount here. So as we can see, it's 12,700 plus the 100 Rand, which will give us our 12,800. So in order to get the 12,800, we had to add these two amounts to get what? To get this total. So if we had anything here, we'll also add this cash flow. So cash flow, we don't have anything, it's 0, leave it at 0. So yeah, so that's how to get your cash and cash equivalent. And then we are moving on. So we are done with our total assets. We're done with our asset parts. With our asset part, our current asset, actually. We're done with our current asset. So now we need the amount that comes here, our total current assets. So we're going to add all these three amounts to get our total current assets. We just use green. So we add all these amounts to get what? The amount here. So let's add quickly. So we're saying is equals to sum. And then just add quickly and then enter. So we have this. We have the amount there for our total current assets. And then we need what? Our total assets, which is this amount here. So in order to get that, we have to say the non-current asset plus our current assets. So we say equals to sum. So you can just use your calculator to get all these amounts. So I'll be using the computer to calculate since it's easy that way. And we have our total assets. So to get this total asset, we set this plus this to get what? Our total. So I hope you all understand. I hope we all understand. So moving on. So moving on quickly. So we're done with our total assets and our total assets actually. So we all know that so okay, so in the next step now, I'll be using like the reverse method, another method of calculating everything. So we all know that our total assets and our total equity and liability, they have to be the same. So already you can just take this amount and then just type it down on our total equity and liability. So it's 142,800, just like that, and then we're done. So we all know that if everything is correct on your total assets, then this here also will be the same. That's how you know that your balance sheet is correct. If that's how you know that everything is that's how you know that everything balances. Yes. Okay, so now we come into our equity and liabilities. So we go back to the question, and then we check what we still need, what we still have. So we have H, which is the owner had taken 16,400 in cash for personal use, which is our drawings. And then I, they telling us that 5,000 was paid on the loan. Okay, so this is the thing about a loan. So as you can check there, they said we took a loan from Alpha Bank, 10% interest. The loan was 20,000. So we took a loan of 20,000. And then we paid back 5,000 during the course of the year. So we paid 5,000 from this total amount of loan. So at the end, meaning we're going to say what? This 20,000 minus the amount we already paid, which will give us what? Our 15,000. So our loan, we come to our current asset, our non-current liabilities actually. The loan, which is the what? 15,000. Because we said what? The 20,000 minus the 5,000 we already paid, which gives us what? Our 15,000. And then going back to the question. So we're done with this I. So let me just highlight that. Done with I. So and then they tell us J, the owner inherited 20,000 and paid this into the current account of the business. So this is what? Capital contribution. So the owner contributed additional capital to boost this business. So now we have all our amounts except for our owner's equity amount. So our owner's equity amount, we have to calculate it using this capital account. That note for capital account. So, but then you can already get this amount easily by just doing what? By just saying, you can just say our total equity and liability minus, let me just highlight that with red or with blue. So we can just say our total equity minus our, okay, so we have bank overdraft here. So they never told us anything concerning our bank overdraft. So we have 0 bank overdraft. So we say total equity and liability minus our current liability minus our loan in order to get what? To get this amount here. Or actually our total owner's equity, which is this amount here. So we all know that when you say this amount plus everything else here, you're supposed to get what? This total. So when you do a reverse method, you can say this total minus everything to get what? Your balance at the beginning. So let's minus quickly. So we're saying this equals to this amount minus this 5,600 minus the 15,000. We get our 122,200. Our 122,200. So that's our total owner's equity. So when we say this plus this plus this, it's supposed to give us what? Our total equity and liability, which should be the same as our total assets. Okay, so moving on. What's next? What's next? Okay, so next, what you need to do, okay, we need to calculate if this amount is correct. So now we're going to check if this amount is correct by doing what? By completing our capital account. We're going to check if this 122,200 is correct. So we're going to need what? Our opening balance. We're going to start with our opening balance. How do we get our opening balance? We go back to our example. So opening balance. In order to get your opening balance, you have to say assets minus your liabilities. You have to say your total assets minus your total liabilities. So when we check our, we're seeing our his assets and liabilities at the beginning of the period were as follow. So we have our total assets and liabilities at the beginning, and we are looking for what? Our opening balance. So we're just going to, so which ones are our assets? We know that equipment, vehicle, inventory, cash in bank, debtors. That's our assets. So let me just highlight that with a different color. Red, okay. Yeah, that's our assets. And then our creditors and loan is our liability. So that's our liabilities. So meaning we have to say all these minus the 2,500 and the 20,000. So let's just do it quickly. We say is equal to sum. And then we add all our assets. So our total asset is 120,500. And then now here we're going to calculate what? Our total liabilities. So sum. And then we add the 2. Enter. So that's our total liabilities. So this is total sum, total liability, total assets, and then this amount is for our total liabilities. So after we say what, we minus the two amount, we say asset amount minus our liabilities, and we say enter. So our balance at the beginning is what? 98,000. 98,000. Going back to our capital account, our note for capital account. So our opening balance is what? 98,000. Okay, moving on. So we have our drawings. So we're talking about drawings and contribution. Going back to our information. So they told us already that the owner had taken 16,400 in cash for personal use. So that's our drawings. That's our drawing, 16,400. So we're going to get 16,400 on our drawings. And then our capital contribution. They say the owner inherited 20,000 and paid this into the current account of the business. So 20,000. So it's what? 20,000. So we have all our amounts. So we use all these amounts to get what? Our calculated balance. We use our opening balance plus, no, not plus, minus drawing. So drawing is supposed to be a negative amount. It's supposed to be in brackets. So our drawing is supposed to be in brackets. And then we use all this to get this to calculated balance. So let's do that quickly. So we're saying is equal to sum. And then we highlight and then close bracket, enter. So it's there's 98,000 minus the 16,400 plus the 20,000 to get what? Our 101,600. And then we're looking forward for our profit for the year. So our profit for the year, in order to get your profit for the year, you have to say what? The closing balance minus the calculated balance in order to get what? Your profit for the year. So now let's get our closing balance. So how do we get our closing balance? Isn't it to get our opening balance? We said what? Our assets minus our liabilities. So same thing with our closing balance. We're saying assets minus liabilities, but then in this case, we're doing what? At the end, our assets and liabilities at the end. Yeah, we're doing our assets and liabilities at the end. So let's do that quickly. Yeah, Concha, how do we do that? How do we do that? Okay, so we know that our total assets, we have our total assets already, which is this amount, which is 142,800. That 142,800 is what? Our total assets. And then, so we're going to say, we're calculating what? We're calculating this balance. Okay, let me just do the formula just somewhere quickly. So we say is equals to this amount. Is equals to our total assets minus our total liabilities. So we know our liabilities. We know that our liabilities at the end, we have this 15,000. And then we also minus also our 5,600, which is for trade and other payables, which is supposed to give us what? Our 122,200. So that 122,200 is what? Our closing balance, which is 122,200. And then we say this amount minus, we're saying our closing balance minus, okay, so let me just do the formula quickly. So we're saying closing balance minus our calculated balance to get what? The 20,600. So this is our profit for the year, our 20,600. So this amount, our closing balance, is our owner's equity, our total owner's equity. And then our capital amount. And then we have our capital amount. Our capital amount. Our capital amount being what? This calculated balance of 101,600. So capital amount is what? 101,600. And then our current account is 20,600, which is our profit. So when you add these two amounts, they give us our owner's equity. They give us our owner's equity. They give us what? Our owner's equity. So we know that we're supposed to say 15,000. And then our current liabilities is what? 5,600. 615. So in order to get our total equity and liability, we have to say this 122,200 plus the 15,000 for non-current liability, and then we also add our current liability to get what? This amount here at the end, our total equity and liability. So when you add all those amounts, you're supposed to get this total. So I think I've dealt with everything concerning this example. So that's how you do the example on your textbook. That's how you do that example. So yeah, so next I'll be doing a past question paper. Next I'll be doing a past question paper concerning this incomplete records. So for now, I'm going to end the video. With this. So please do like and subscribe if ever this video was helpful to you. And then please do subscribe because I'm going to post more videos concerning our accounting. So we're also going to do things like your partnership and all those other topics that you'll be needing to that you need to know actually. That you need to know in order to to pass your accounting, or to in order to master your accounting. So please do like and subscribe so that you don't miss out on any of the new videos that I'll be posting. So if ever there is anything I've done wrong in this video, or if ever my sound quality wasn't proper and all that, please do bear with me. I will try to fix all that in my future videos. I'll try to improve my sound quality and all everything else concerning everything else that might be wrong in this video. I will try to fix all that. So please do comment if ever you find any errors in this video, so that I can try to fix all that. So from me to you guys, have a lovely day. Thank you.